Okay, so we're gonna look at our trade today in the Nikkei or the Japan 225 for our trade, which ended up with around 2R, giving us around a $2,000 profit here with a beautiful, beautiful setup. But first, we're gonna look at the fundamentals, and we see that in the 4-hour time frame, if we are to look at that, we see that the Nikkei has been moving in a bullish pattern, making these higher highs and higher lows. And so we see that Nikkei is actually performing very, very strong even during these times of geopolitical tensions. And the reason is because of the yen. And so the yen is now experiencing some weakness because of the fact that investors would prefer to put their money in more safe haven type currencies such as the dollar, such as the Swiss franc, British pound, as well as the euro. Funds flow out from the yen, making it weaker. A weaker yen actually boosts the stocks in Japan, especially when the Japanese go and export their goods. This would be relatively cheaper for the foreign investors. And thus, when the foreign investors place their money and buy these Japanese products, the money that would be received by these exporters would now be bigger in Japan. We do our research in fundamentals, and we see that the Nikkei or the Japan 225 is now in a growth regime, and it's fueled not only by the weakness of the yen, but also by global AI and tech capex, as well as increasing interest of foreign investors to Japanese technology. And so this also applies to the interest of foreign investors to invest in Japanese cars, such as Toyota, which has been receiving some very positive news in the past few days and weeks. Looking at the 4-hour time frame, we see that the most recent demand zone is over here, situated here with this 4-hour demand. We see that liquidation of this liquidity, as well as that break of structure, which creates a new high, therefore creating a new and valid area of demand in the 4-hour time frame. And so in this impulse leg, we do our Fibonacci retracement from swing low to swing high, and then we wait for that retracement back into that discount pricing below 0.5 Fib. And we see that there was also liquidity that was present here and here in that impulse leg up. And so zooming in, we went to the 15-minute time frame, and we waited for price to come back down. And as you can see, when it went down to this level, that was already below that 0.5 Fib, making it in discount pricing. And we observed that there was also internal liquidation present over here that liquidated those early buyers that wanted to go back up too early, meaning this would be most likely a pullback trade or a pullback intraday swing, targeting those sellers who sold on that impulse leg to the downside, reaching for that discount pricing. And so we see that price came up and developed here around early Asia session. This was the fractal high, which was then broken by price reacting again to liquidity in discount pricing after that internal liquidation, creating a new and valid area of demand in the 15-minute time frame situated over here. And so with that, we entered after seeing that strength, rode that until it came to this area here where there was a fair value gap. This was more of a pullback trade into that impulse leg down, as I said. And this was a beautiful setup because you could really see that momentum going up. And if we look at the 4-hour time frame, we can appreciate it more. And we see that price really rejected off of that liquidity in discount pricing, really rejecting off of that, creating that wick in the 4-hour time frame. And that is why that was additional confluence for us to be taking that long. And now the reason why I took the 15-minute time frame and not any higher time frame for this is because of the fact of a looming Bank of Japan intervention that could once again manipulate and therefore increase the value of the yen, which is bad for Japanese stocks such as the Japan 225 or the Nikkei. And as you can see here, we were looking for that short position as well in USD JPY. And so now it is currently nearing that intervention price of $160 per Japanese yen. And that in itself would be I would say another risk for going long on the Nikkei. And so if we go back to the Nikkei, we see that was just perfect, and this move in the 15-minute time frame would be immune from that intervention, as it has not reached that intervention price as of now.